Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you could head to incomeinvestors.com, or you can find the link to the website in the description below. The Federal Reserve is expected to cut interest rates well into 2025 as the central bank looks to achieve a soft landing for the U.S. economy. The push to reduce interest rates should fuel demand for financing, loans, and investments as carrying costs declines. As a play on expected tailwinds behind lower interest rates, take a look at Sixth Street Specialty Lending, Inc. They're traded on New York Stock Exchange under symbol TSLX. John?
Thanks, Mo. Yeah. Sixth Street is a specialty finance company that lends and invests in middle market companies. These companies use the funds to drive organic growth, acquisitions, market or product expansion, and recapitalization. Now, according to Sixth Street Specialty Lending, 99.6% of its debt investments generate interests at floating rates, uses the interest, of course, to pay out dividends. At the end of June, which is the most recent data, Sixth Census portfolio was valued at around $3.32 billion and made up of 105 companies and 4 structured credit investments. Now, on the technical side, Sixth Street Specialty stock was traded in a relatively narrow channel between $19.02 and $22.35 per share over the past year. As of this recording, it's currently hovering at $20.80 per share. The stock is above both its 50-day moving average of $20.57 per share and 200-day moving average of $20.14 per share. Moreover, Sixth Street Specialty stock chart is showing a golden cross. That's a bullish technical indicator. When the 50-day moving average is above the 200-day moving average, this pattern suggests additional gains. Next up is the record $24.74 level, originally achieved in, I think it's November 2021.
How is this company doing financially?
Sixth Street grew its revenue 66.4% from 2019 to a record $421.1 million in 2023. Moreover, it experienced growth in 3 of the last 4 years, including a stellar 36.6% gain in 2023. Revenue grew at a nice compound annual growth rate during this period of 14.2%. Now, looking ahead, the revenue growth rate is expected to slow a little bit. This could be due possibly to the slowing economy. Analysts expect Sixth Street will report high revenue of $475.9 million in 2024, followed by a slight decline to $460.4 million in 2025.
And how is the profitability looking here?
According to the bottom line, Sixth Street has been consistently profitable, highlighted by growth in 3 of the last 4 years. Last year saw a major rebound in profits from $1.38 per share in 2022 to $2.61 per share in 2023. Now, the company's considered profitability is expected to extend at least into the next 2 years. Analysts expect Sixth Street Specialty report an adjusted $2.30 per diluted share in 2024, compared to $2.36 per share in 2023. That's expected to fall slightly to $2.19 per share in 2025.
For income investors, how is free cash flow looking here?
The fund statement shows the delivery of steady positive free cash flow, including a record $192 million in 2023. Now, the key risk for Sixth Street Specialty is the $1.7 billion in total debt and a weak working capital at the end of June. While debt needs to be monitored, I don't really see any immediate issues at this time. The company's net earnings have easily covered total interest in the last 5 straight years.
If you like what you see so far, check out incomeinvestors.com. While you're there, you could also sign up for our free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. And John, let's talk dividends here. What's happening here?
Sixth Street's forward yield of 10.12% is above the 5-year average yield of 7.28%. Now, the higher yield was due to share price weakness. Over the past year, to the most recent payment, which was September, of 46 cents per share, Sixth Street Specialty stock paid out $2.11 per share in dividends. Now, the company's dividend includes the main quarterly dividend, as well as a smaller dividend paid out roughly 2 weeks prior. For example, Sixth Street stock paid 6 cents per share of dividends on August 30th, followed by 46 cents per share on September 16th. Now, similar payments were also made in May, June, February, March, and November, December.
John, thank you so much for your insights. Based on Sixth Street's expected profitability and relatively high payout ratio of 89%, we don't expect dividends to change much in 2025. For now, investing in Sixth Street specialty stock is about receiving regular dividends and potential for some capital appreciation. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.